Now, while tariff talk out of Washington does remain a trending topic on the street, investors will be focusing on the Federal Reserve during this shortened week. Fed minutes come out Wednesday afternoon, and the Fed's preferred inflation gauge, that's the Personal Consumption Expenditures Index, PCE for short, is out Friday morning. So join me now with more on these topics is Tom Hulick. He's the CEO at Strategy Asset Managers. Tom, it's great to have you on the show this morning. It is a holiday shortened trading week, starting with some momentum. Where do you think we go from here?
Well, Kristen, thanks for having me on. Hello from Florence, Italy. And this is a great destination place for summer travelers, as I've seen with the crowded streets here. So, we're very optimistic about what we're seeing with the Trump tariff talks. We see a lot of optimism that's not being talked about in the media. For the end of the year, we've got a lot of things to look forward to. M&A activities picking up right now. Tech earnings are going to be very important this week, but the outlook for us is very positive, although we are in a more defensive position right now.
Talk me through that. What exactly you mean by you are in more of a defensive posture at this point?
For the first half of the year, we were taking profits on some of the companies that we own, and we're an active managers. Strategy Asset Managers has 4 different strategies from global to growth to value. But it was important for us to take some of the profits off early on and just kind of wait out this discussion that's going on with the uncertainty in the tariffs. So we were in healthcare, we were in energy, we were in infrastructure and insurance companies, and that turned to pay a lot of dividends for us. We're significantly outperforming right now.
Interesting. And so these tariff talks, of course, they can whipsaw the market up or down at any given point, Tom. How is your defensive posture taking into account the fact that before the holiday weekend, we were looking at 50% levies on Europe, and of course, just days later, a walk back on that particular policy?
Well, I think with any negotiation, you got to start somewhere. And when Trump started to have these discussions with the world, we all knew that we were in a very strong position in the United States for going to the table and asking for something to compress. And in the United States, we've been taken advantage of for many, many years. The manufacturing industry has been decimated. We need to bring back manufacturing to the U.S. And so when you see the discussions coming back to the table, and as the EU has done, we walked back the tariff talks and gave them an extension to come back to the table. And that's a smart move. And I believe that Ursula will definitely, in the near term, come back with something meaningful, and we'll be able to move beyond this uncertain phase.
Where do you see opportunities arising potentially down the road, knowing that the Fed minutes might give us some clues on monetary policy that we'll get Wednesday afternoon?
Well, we all know the deficit is so large that it's crimping the fact that we're spending more on interest payments than we are on our defense budget. So eventually interest rates will come down, and that's a given. But when they're going to come down, we expect the first rate cuts to happen as early as late June, and then throughout the second or third and fourth quarters. When you see this start to happen, this will be jump-starting the economy again. I think we're at the beginning of the next generation bull market out there. What are the opportunities out there? Well, M&A is picking up significantly right now. You see the lead tables and what the deals are. Salesforce just made an acquisition. But I think that the big story out there is going to be in biotech and pharma. What's going to be happening in the biotechnology space? You're going to experience significant developments that happen over the next decade.
I do want to ask about NVIDIA, and that's because it's going to report results after the market closes on Wednesday. It's a $3 trillion plus company when we look at its market value, one of the most valuable, if not the most valuable out there. Tom, how could the direction of NVIDIA after those results impact the major indices, at least in the short term?
We personally believe that the earnings aren't going to be that significant. I do think that they'll outperform. That's one point. The second is as the retail investor holds a majority of the sentiment out there for a stock like an NVIDIA. And although a lot of ETFs hold it, and this is very leveraged, NVIDIA is going to continue to outperform. And we've seen a slowdown in what the tariff talks have meant for the hyperspace community and also for NVIDIA in the future. It's just, I hope you own it, is what we have our clients in.
Interesting. So I do want to talk about deals. You mentioned that you anticipate more M&A down the road. Just last week, we saw two successful IPOs here at the stock exchange. Both of those companies, Mountain and Hinge Health, respectively, pricing at the high end of their ranges, each of them raising hundreds of millions of dollars in their debuts. Double-digit pop when they opened on Thursday, follow through higher on Friday, and both stocks looking to open higher today as well. What does this symbolize about the market, Tom?
Kristen, as you know, that's very refreshing when you see the IPO market start to move again. And as an active manager like Strategy Asset Managers, we will go and take a look at that as a signal on the technical basis. But it really comes down to, what the quality of the company that's coming out in the market and where we are from an investment standpoint. And if you look at interest rates as they come down, I think that those people that are looking at deals are looking at the potential for a very positive next 6 months and cycles ahead. So the M&A market is starting to pick up more, and you're going to see more IPOs come out. And I believe that we're going to be refreshed by some of the alpha that comes off of that.
Any specific stocks on your radar, Tom?
Well, as we've said, in this position of being in more of a defensive standpoint, we were looking at Walmart. We liked Walmart's earnings. We took a look at Cisco. That was the second one. And then we've been very active in trading some of the insurance companies like Gallagher. But these are companies that are more on the defensive basis, but you must not back away from your technology positions and your healthcare positions out there. And if you look at a company like Walmart, going back to that, Walmart could actually be taken a look at as a next generation retail technology company. What are they going to do with machine learning? What are they going to do with potentially being able to problem solve and get goods to consumers that much faster? Well, they're going to have to use the ability for faster chips, the processing of situations, and also problem solving. And this is going to be the next wave of what you see with these retail or I should say Walmart, consumer product goods companies.
Gallagher, Walmart, two NYSE listed stocks. Tom, we appreciate your time. That's Tom Hulick, CEO at Strategy Asset Managers, joining us from Florence. Thank you.
Thank you very much, Kristen.